Shares of HIMSS and HERS are up an incredible 142% so far in 2025. This is one of the hottest stocks on the market. It's one that I've been covering on asymmetric investing for about a year now. It's actually one of the biggest holdings that I have today. But what exactly is going on? There hasn't actually been a ton of news about HIMSS and HERS. The company doesn't report earnings until later this month. So is that momentum going to continue? Is the market rethinking what they think about HIMSS and HERS? Is this a bubble or a meme stock? I want to try to answer those questions today because I have these same questions myself. So I'm going to try to put some facts to what is going on the ground, what the market might be thinking, and then what the commentary is about HIMSS and HERS. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. The first thing that I want to highlight is the commentary that has been happening around P1s and HIMSS and HERS. This is something that we've heard about the company since they introduced GLP-1s in the summer of 2024. It's not a product that's been around all that long for HIMSS and HERS, but it has really changed the company's projected growth in the future. It's one of the hottest products in the pharmaceutical industry today. HIMSS and HERS is using a kind of a loophole to sell compounded GLP-1s. So this is not the name brand product, but that's the way that they're able to sell them. And it's been a relatively hot product for them. We don't know what the fourth quarter numbers look like, but we know that it was a tailwind in the third quarter. And a lot of investors think that that business, a huge part of HIMSS and HERS business and growth is going to go away when HIMSS and HERS, when P1s come off shortage, which they are starting to, almost entirely off shortage. And so then that loophole, that compounding loophole that HIMSS and HERS is using is going to go away. So is that weight loss business, is the GLP-1 business going to go away entirely? No, it's not. And I think that's something that we need to be clear about as investors. HIMSS and HERS may have to change what they sell, but this is not a company where you go to them and you say, hey, I want this specific solution. I continue to say that HIMSS and HERS is much more like a platform. You're going to them with a problem. I have a weight problem. I have a hair loss problem. And then they're going to provide solutions based on the solutions that they have available in their product line. Right now, they have added GLP-1, so that's expanded the number of products that they have in weight loss, but the business is not entirely dependent on GLP-1. So I want to give a quote from the most recent conference call. We ended the quarter with over 2 million subscribers, representing 44% increase from the third quarter last year. So this was year over year numbers. While our GLP-1 offering is resulting in incremental users coming onto the platform, the majority of our subscriber growth is coming from our non-GLP-1 related offerings. Our subscriber base, excluding GLP-1s, grew approximately 40% year over year. So subscribers grew 40% year over year, even excluding GLP-1s. That is an incredible growth rate. And even if those compounded GLP-1s come off of the list of products that HIMSS and HERS can sell, they have a number of options. They have a generic that they're going to start selling. They could sell the branded GLP-1 products. So it's going to be a much, much higher cost. Maybe the market isn't quite as big for those products, but that business, the weight loss business, doesn't just go away. So I want to really hammer that home. And when you look at HIMSS and HERS' growth, even if the company doesn't grow at the same rate that it is expecting to in the fourth quarter. Now, remember, management is expecting to grow 90% in the fourth quarter of 2024. So we'll see what those numbers look like when quarterly results come out. But 90% growth, even if that growth rate is 50% or 40%, this is actually not all that expensive of a stock. So let's start with that revenue momentum and the growth rate. You can see that in this chart here. Yes, I think it's very clear that the growth rate was helped by GLP-1s in the third quarter of 2024. Not only were those subscriptions relative to the number of subscribers HIMSS and HERS had, they were likely a much higher price point than some of their other offerings. But remember, the second quarter, denoted in June 2024 on this chart, GLP-1s basically didn't exist in the business. There was only a week or two that they were actually for sale during that quarter, and the company grew in excess of 50%. So like I said, if the growth rate goes down to 30, 40, 50%, that's still a phenomenal business. And when you look at it that way, HIMSS and HERS stock is not all that expensive. This is a chart of the price to sales multiple of some of the hottest, most talked about stocks on the market. And then I also included Eli Lilly in this. Eli Lilly is in red. So HIMSS and HERS price to sales multiple is currently about 10.4. Tesla's price to sales multiple, much lower margin business, 11.7. Eli Lilly, 16.9. Nvidia, over 30. Palantir, you want to talk about a meme stock, a very highly valued stock, a price to sales multiple that is nearly 95. HIMSS and HERS is growing faster than every single one of those stocks and it has a lower price to sales multiple than every single one of them. So is this an overvalued stock? It's very possible that it is today. It's very possible that the stock pulls back significantly. I wouldn't be shocked if shares fall 50, 60, 70% at some time over the next couple of years. But I could also make the argument that this is a relatively good value stock. That's why I actually bought shares early in February, because I think the growth rate in the price that we're paying as investors, even at this elevated price compared to where shares were trading last year when I started buying HIMSS and HERS, it's still actually a pretty good valuation.
Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now.
Let's look at another factor that could be a tailwind for HIMSS and HERS. That is the company's short interest. This isn't something that I cover a lot on asymmetric investing, but it is worth pointing out in this case. And what you can see here is that the short interest is now over $2.2 billion, and about 33% of shares outstanding are sold short. That is the biggest short interest HIMSS and HERS stock has ever had, even going back to 2021 when the company was extremely highly valued during the pandemic. So as of at least the end of January, that's when this data is from, very, very high short interest, and that high short interest was happening as the stock was rising as well. When investors are selling a stock short, that means they're adding supply to the market that should lower the price of the stock, and then it's going to push it higher when they have to buy it back. But if we do get a short squeeze, and that's probably part of what's happening over the past couple of weeks, if there's a short squeeze in the stock, that could push shares even higher. So if we have phenomenal results in Q4, maybe even good guidance for 2025, so the fundamentals of the business get better, then the valuation doesn't look quite as expensive, and there's a short squeeze in the stock, it's very possible that HIMSS and HERS continues its absolute tear in 2025. I'm certainly not selling at this point, but I'm probably a little less likely to buy, and at least until we get a little bit more data. So what am I looking for going into the quarter? This is fundamentally the most important thing. I'm an investor who's likely going to hold shares of HIMSS and HERS for many, many years, potentially even decades. That's the kind of outlook that I want to have on the company. And what I'm looking for this year is for them to expand the number of products that they're offering. They have already talked about moving into menopause products. It would be shocking if they didn't add some more GLP-1 products or GLP-1 type products, especially given the questions around shortage. They have also talked about using artificial intelligence to basically provide more information to their consumers. That's going to be another tailwind for them. If they can be a better platform for the users who are actually buying products for them, that's going to be something that's going to be phenomenal for them and be a disruptive force in the future for HIMSS and HERS. All of this could add to the momentum that we've already seen in the business. We've seen phenomenal subscriber growth in excess of 40%, even excluding those GLP-1s. Their prices are going up. The company is now profitable, and it's generating positive free cash flow. All of these things are what I want to see from HIMSS and HERS. The market seems to be changing its tune. That's part of what's going on. Very possible that there's a short squeeze, but I think part of this is just what you would call a re-rating of the stock. The market saying, you know what, maybe we shouldn't value HIMSS and HERS at 3 or 4 times sales. Maybe we should be valuing this like a growth company that's growing in excess of 30, 40, 50%. That's the kind of company that you wouldn't be surprised if it's trading in excess of 10 times sales or even higher than 20 times sales. And as long as that growth train is continuing, this is a company I'm going to likely be adding to over a long period of time, especially on any pullbacks. But let me know what you think about HIMSS and HERS today and what is going on with the stock. Have you been riding this in 2025? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next.